So let's do this, everybody. Let's go over Euro USD, since that was the winning trade today. And then let's flip through GBP AUD, GBP NZD, and Euro GBP one more time, just to recap my watch list this morning, recap the trade, recap everything that I liked and that I didn't like, because I think that there is a lot of value to be pulled, especially from these two GBP pairs. I think very often we want to talk about the wins. They're super fun, they're exciting, it's great to make money. That's why we're here. But when we talk about learning, there's not too much that you can learn from winning trades. Once you have a system and a way of reading the market, if you know your rules and you know your system, the wins are almost irrelevant because the outcomes are something you can't control. What you can control is the process. So we want to focus in on that. And when we talk about how to avoid bad trades, that goes back to your process, because if you have a profitable process, it's going to teach you how to avoid crappy trades. So first, let's look at Euro USD. I'm going to show you, you can see the full move here off the 50 EMA down towards this green horizontal line. That's ADR. It ended up breaking through the 800 EMA, and where I have this white horizontal line right here, that's where I got out at my best exit, where my take profit was hit. So you can see the position at 121.31, all one position closed in pieces. I was out of a good chunk of the trade, about 50% of the trade here at like 121.22, 18, 19, right around that zone, which is at the Asia low right here where you see this blue horizontal box. I was out of the trade before the news came in because I knew that the news could be very volatile, and the news was forecasted, if you look at Forex Factory, to be worse than previous. Negative news would normally push Euro USD higher and the dollar index lower. As you can see though, Euro USD shot down and is now returning higher. The volatility that you're seeing now is anticipated when we have a high impact news event. But first, you want to address the fact that the forecast was way off than what it actually came out as. And that's why, because it was good for the dollar, the news was good for the dollar, you'd think. That is why you're seeing, well, I guess the news really isn't good for the dollar. Because if it's higher CPI, it's green here on Forex Factory, but that necessarily isn't good for the dollar. Either way, it's tough to anticipate how high impact news is going to shake the market. So I had my stop loss locked after I had already closed, like I showed you, a chunk of the trade at Asia low, which was about 2R, which is still a great trade. Like 2-to-1 is still a great trade. But I had my stop loss locked and I was able to take advantage of the spike down here and get my take profit hit near ADR. I think the reason you're probably seeing Euro USD come up now, tell me if you agree with this in the chat, is because this news with CPI rising and everything getting more expensive, that news is not actually good for the dollar. It's better than forecast, so it like faked everybody out and shot lower since it was opposite of forecast. But when you think about it, it's not good for the dollar. So to see the dollar index coming lower now makes more sense since CPI is going up, and that would drive Euro USD up as an inverse of the US dollar. I hope that all makes sense. Give me the thumbs up if that makes sense so far. Twitch said you explained everything on point. I love it. Good. So now let's talk about how I took the entry this morning. Let's throw it into replay mode just to save us a little bit of that craziness. So you can see overnight, we are sitting in the Asian range. This white line right here that you see, this dotted white line, that's my stop loss locked in profit. I just wanted to show that to everybody. As the trade developed, I moved to the stop in profit so I couldn't lose money going into the high impact event. Overnight though, TDI is in the sell zone. We touch oversold, which I don't like, and that's one of the knocks that I gave it here in my notes. It's also still in the Asian range. That's the more important knock. Those two knocks together, I graded it a B setup. With my B setups, I'm looking to take profit at like 1.5, 2R and lock my stop loss there. Regardless of news, irregardless of news, that's how I manage B setups. So off the 50 EMA, I'm looking for the D1 entry. If we go to the 1 minute, you can see back here, we had divergence building from the RSI high at 1 a.m. If I blow up the RSI high, you'll see it here. RSI is falling into the 4 a.m. hour, but price is rising. So that creates divergence. Then I box off the pin high of the divergence structure to show the stop level that I would initially look to use. Now, this is happening before I'm at the chart. So this is analysis that I did after I woke up. By the time I was ready to trade, it was close to 6 o'clock this morning. I see it set a lower high in right here at 121.36, but I didn't want to get short yet here because the TDI had just pulled into the buy zone. When the TDI comes down back into the sell zone, after confirming that level with 2 more hits, I felt much more solid about using that as my stop loss and looking to take it short there as a D1 entry. Not an A1, a D1. And if you don't know what the D1 or the A1 is, go to my website. I'm going to put a link in the description and you can find all about how I trade these 3 systems, how I've backtested these 3 systems, and how they've proven themselves profitable in the past and then even in the future, in the current moment, like today. So that was where the 1 minute entry comes. This is, again, a D1, so I'm not just using the 15 minute like I do with the A1. I'm using the 15 minute and then the 1 minute to find the divergence and the stop level. It's always about finding the stop level. So I liked the risk there. I liked that the TDI fell into the sell zone, and I knew if it held the sell zone, I could see it move lower. So if you look back at the 15 minute, I'm looking for this to go to at least Asia low to get 2R with a 6-7 pip stop loss, 15 pips to the Asia low. That's where I'm looking for it to move. I also know, because of the perfect TDI in the sell zone, that this could move down to the 800 EMA today, even down towards ADR if it wanted to. Now, news shakes it up, but with a perfect TDI like that, if you can get outside the 8 EMA and get the 8 under the 21, you're going to take it candle by candle, and that 800 EMA is going to be the first target. Either way, I took profit at the Asia low because we're still in the Asian range, and I know that if we're in the Asian range, it could stay in the Asian range all day because it already made a decent-sized move in the Asian session. Either way, though, take the entry. Don't try to control the outcome. I'm following good rules. And candle by candle from when I took the position, it held the 8 EMA all the way into news. And then when news broke, because news was off forecast, right, it shakes everything up. Euro USD doesn't know how to react because it's off forecast. And it ends up spiking down, following the direction that market sentiment tells us it should move. And it ends up hitting my take profit down here at 120.85. And you can see that right here on the P&L. Best exit, 1.2085. Okay? So that was the position on Euro USD. Managed it well. I think moving my stop loss at 2R was proper. I think taking profits before news is always proper. And I think having a take profit in down near ADR when you're going into the news, that's the best way to handle it. Because now look, even if news wants to do what news does, which is be volatile, I'm still getting taken out in the direction that I thought the move would go. So that's Euro USD. You'll see it looks very similar to Euro JPY. If you look at Euro JPY last night, in the Asian range, coming off the 50 EMA, heading down towards the 800 with a perfect TDI in the sell zone. So I was thinking Euro USD would do the same thing, which is exactly what it did. Euro GBP, now we're going to get into the trades you should avoid. This is an A1 entry today off the 21 EMA. It's technically an A1 breakout. The reason why I told everyone in the group chat to avoid it is because this is overextended. It's the biggest body of the day. And normally, because of the back testing, I know that overextended candles will pull back. They won't continue in the direction that they should move. You don't want to trade overextended candles. They normally are fake outs. And now you have bullish divergence present on the bottom here as price is falling and the RSI is rising. And that's not a good sign for drop either. That's a sign that change is coming. Whether it's going to move sideways or rise, I don't know. But that divergence is a signal of change. So that's another reason why I don't love the short idea here. But just notice, what does the next bar do? It turns against you. That's the first sign that a 2-candle or 3-candle formation for the A1 system, that's the first sign that it's not working. So right there, you could have gotten out of the trade fully or at least half out and saved yourself some money. The same thing happened on GBP AUD and GBP NZD. We've got a bias from yesterday, but GBP AUD, and this is important, so make sure you're not on your phone or Facebook, you're listening to me here. The candle formation is solid. The bias is solid. TDI is in the buy zone all day. But the TDI value at that candle close at 7 a.m., the RSI is not in proper position for it to be qualified as an A1 entry, according to the backtesting. So when we backtest the system, we have to make sure that we're then trading exactly what we backtested. So just because we have a candle formation doesn't mean we can jump in the trade. If the TDI value isn't right, you're probably going to get burned. Sometimes it will run and carry and make you think you should change your rules. But this is one of the trades that you can use to come back to and say, look, if the TDI isn't right, even though I have a candle formation, I'm not going to take the trade. And what does it do in the next bar? It turns against you. Again, another first sign that it's not going to work out for you. That would have been a good place to get out and acknowledge your mistake, not getting in when the TDI is right, or getting in when the TDI is not right. And then it gives you an opportunity there to get out without getting the full stop. And the best part about this is that it's moving higher now, which is going to teach you the lesson even more. If you took this trade, it's going to teach you to not get in too early. So hopefully you learned your lesson if you did take this position. GBP NZD, very similar. Another 2-candle formation without proper TDI value. RSI is not even close. What does the next bar do? It's bearish, telling you to get out. It could have saved you money if you had done that and acknowledged your mistake. Acknowledged that you tried to trade a good formation. You were half right. You had a good candle, but you didn't have good TDI value. And that's why our system, I think, works so well, because you're using price action on the candles to confirm the candle formation. And then you're using the TDI, which uses volume, to confirm when that candle formation is the breakout move or not. And that's why this doesn't work for you, because the TDI is not right. So I hope that this teaches you guys the lesson if you did take those trades, or even if you didn't. Screenshot these, save these. It's important to know what to avoid. When you have language that teaches you what trades to avoid, it helps you save money. Because us as humans innately think we're right more times than we're wrong, and that any idea we see is probably going to work. But that's not the case, especially in trading. So that's why you need to backtest and prove the system that you're trading profitable. And if you don't know how to backtest, I'll put a link in the chat here for the stream so you guys can go to the backtesting course and check that out. I'll put a link in the description to the video as well so you could backtest for yourself. But if you backtest that system and you know the rules are profitable, to break the rules on formations like this, you're just asking to get smacked and get a lesson taught to you. So that's the recap of the morning so far. I made money on Euro USD before news. I managed the trade really well, and hopefully you took some value from that. Then we talked about Euro GBP, GBP AUD, and GBP NZD, and why all three of those pairs threw fake outs this morning. And I think, like I said, those three hold more value to me as far as like lessons than the winning trade on Euro USD, because I can identify hundreds and thousands of D1s on any pair over any period of time. That's easy. Winning trades are easy to identify, but knowing which trades to avoid so you don't take unnecessary losses is so important for so many of you to start practicing more. So I hope that this video gives you a little bit of value in that direction. And if you guys have any questions about how to grade your trades, how to identify, a proper entry versus a not proper entry, all of that is taught in my courses. And I don't want to be like plug, but it's important that I make it very clear. In the courses, you learn the precise entry signal, where to put the stop loss, where to put the take profit, how to grade the trades, how to manage the trades once they're moving for you or against you. I just gave you some nuggets there about the two candle formations, but we cover all of that in the course. And those precise details are the reason that most of you are not consistent, is because you're missing precise details like that. So if you're interested and you're not already in ASFX, click the link in the description, check out the courses, and just reach out to me if you have any questions. I'll get on a call with you. I'll get on a voice message with you. Whatever you need to clear it up, I want you to feel confident taking this step into ASFX, because I know that once you're in with an open mind, look at all the people in the chat today. There's tons of ASFX members in here watching. They'll tell you they've gained more confidence, gained more control, and gained more freedom because of what we teach at ASFX. So if I could share that with more people, then I'm a happy guy. So that's why I'm doing the streams. That's why I ask for the thumbs ups and the shares, because I just want to keep spreading this value to as many people as we can, so you can learn how to avoid bad trades like GBP NZD, GBP AUD, and Euro GBP, and find the winning trades like I did on Euro USD.